Okay, time for our dollar dialogue segment. And this week we're going to focus a little more on the RBA cash rate, but also its impact on the housing market lately. And for that, we're joined by Dr Nicola Powell, who's the Chief Residential Economist at Domain. Nicola, welcome to the Savings Tip Jar.
Hello.
Hi, Nicola. Great to have you with us. Now, before we get into everything Reserve Bank and housing market, have you got a generic savings tip for us?
I absolutely do. So mine's the 24-hour rule for anything that is a non-essential purchase. So before you go into buying anything that's, say, over $50, wait 24 hours. Because what you will find is impulse buys rarely survive a good night's sleep in that kind of 24-hour period. So you'll be surprised how much you save. And I think we're all very much guilty of those impulse buys.
Great tip, Denise. We'll put that one in the jar. Yeah, I haven't heard
Yeah.
that one on this podcast before. We've been running this for probably about 4 years, I think, now. So I'm surprised no one's ever said that. But yeah, that's a great tip, particularly for those that do often suffer from buyer's regret. That's not really me. I'm, quite stingy, and if any purchase over $50, I'm often agonizing about for weeks, and eventually I just go, oh, okay, just do it, buy it. But yeah, certainly for others that have no hesitation, that 24-hour waiting period could certainly do the
I
trick.
love it.
So the RBA decision to hold wasn't a surprising one. Obviously, no one was expecting much of a change. But what did you make of Bullock's hawkish tone? Like, was it a classic case of jewel burning there?
Look, it did have that kind of hawkish undertone, and I wonder whether partly it's kind of trying to rein in the real large conversation that has morphed over the last, say, 10 days around the next move from the RBA will be downwards. So I think there's an element of that playing out. And it was, as you mentioned, it was absolutely unanimous. I would be very shocked if they had moved anyway other than a hold. And I think what we're starting to see is the impacts of those 3 rate hikes already this year. It's starting to slow down the economy. And I think this kind of watch, wait and see approach is going to be something that the RBA adopts. And I'm still not even forecasting another rate hike from them this year.
Interesting. Now, we're going to discuss that at length further, but as far as your expert area, which is the housing market, we have seen that very soft, it's fair to say, just probably since the federal budget, but definitely the 3 rate hikes have fed into that. So what will this hold? Will it have any immediate effect? Is this going to do anything to the housing market, do you think?
Look, I don't think so. I think we definitely have got cooling momentum across our housing markets, and Sydney and Melbourne are feeling the brunt of that. Now, we've had 3 rate hikes. That's decreased borrowing power by roughly 7-8% ballpark. And that is having an impact. But we've got to remember we've had 3 rate hikes. We've also had a budget that has been delivered that wasn't very welcome in terms of those taxation changes that are proposed for housing. And, we're expecting those to actually get through the Senate. That is going to have an impact. We've got to remember that these changes are also happening at a time when Australians are feeling fragile. We have very fragile confidence out there, and that has a marked impact on transactional activity. So everything is slowing down, and it was really interesting. We were seeing the rate hikes impact momentum in our housing market even before the budget. But then do you remember back in April where we were being drip fed this kind of leaks from the budget? We were already kind of seeing behaviours start to change. And this is one of the beautiful dynamics of our housing market that I find absolutely fascinating, is how confidence affects behaviour and decisions to buy and sell property. And what you'd find is when you go through a period of fragile confidence, people pause. They wait because they want more clarity and they want certainty. And we're in an uncertain period at the moment. And so, inflation isn't under control. We may have unemployment rising, employment dropping, GDP is weak, our housing market is slowing. So I do think what we're likely to continue to see is still weak momentum for Australia's housing market, irrespective of the fact that we've seen that pause from the RBA.
Yeah, that makes a lot of sense, Nicola, particularly what you say about the uncertainty, how that plays into housing market, because you really do have to be quite confident when you are making a housing purchase, because it is such a large sum of money that you're handing over. And so you want to be confident in your decision. You don't want to be having too many doubts, although that can be quite natural. But yeah, just touching on that a little bit more there. You mentioned how there was some talks of cuts that had surfaced, and maybe that was why Bullock had that strong tone in the announcement and in what she said in the press conference. But I wonder if there was a bit of a coincidence that those sort of talks of cuts surfaced right around the time just after we'd seen those property price results showing sharp drops, particularly in Sydney and Melbourne. I wonder if that sort of played into that. There's a bit of a social media narrative that plays out in the RBA, the banks, the government, they're all there just to prop up the housing market, keep the bubble expanding. I wonder, is there much truth to that sort of that narrative / conspiracy?
Absolutely not. They're really based upon data. I think that is just ultimate clickbait on social media. They're driven by data. And I think what's really interesting is the economy is slowing. We've got employment falling, we've got unemployment rising, consumption. So household spending is starting to ease. And as you rightly pointed out, house prices are falling. And we've got extraordinarily weak clearance rates. When you add all of that up together, normally that is a signal for the RBA to start decreasing the cash rate. And I think that's where probably part of that conversation around cash rate cuts did come from. But ultimately, inflation is still too high. And those cash rate cuts are not going to be in 2026. When you look at the market pricing, you've still got market pricing in roughly a 50% chance of a rate hike in August. I think I am more in the camp of I think we're going to see a period of hold. We will see rate cuts, but they won't come through until the latter part of 2027. I think what the RBA want to see is, have they done enough to tame inflation? And we've got to remember that rate movements behave in a lagged nature. So they're only just starting to see the impacts of some of those rate hikes coming through. And that last rate hike, we wouldn't be feeling that impact now. And then, of course, we've got the proposed deal for the Strait of Hormuz to be opened. And that's obviously going to take a little bit of pressure off the secondary impacts that are coming through in terms of the increased costs associated with fuel. So all of the things are kind of pointing in the right direction. But I think we are definitely just going to see a very poised manner from the RBA, and that poised manner is going to be a wait and see.
Yeah, that's probably exactly how I think definitely the RBA governor, who I'm always quite impressed with in her media conferences, how measured and data driven she is. And I take my hat off to how well she handles all the media scrum there. But for the punters that listen to us, our regular listeners, those that are sort of, tiptoeing around the property market, and that'll include people who've been affected also by the housing tax changes. Let's just have a look at the next 6 to 12 months, say in that period before we see these rates coming down, if indeed they do. Who do you expect to be sort of, buying, selling, holding? What's the general advice for people who are, really in that wait and see? And it seems like a lot of people are in it.
Yeah, and I think that this is quite a poignant time when we go into dynamics like this where property prices are falling, we've got slowing momentum because people feel very uncertain and unclear of what it means for them. And particularly if you've had a valuation for your home maybe earlier in the year and then you're getting another valuation and it's much lower. And often can be, tens of thousands of dollars. I mean, this is significant amounts of money. I mean, we've got to remember 70% of Australia's household wealth is tied to the value of our homes. That is a massive impact on people's wealth position. I think, my advice is, and look, this isn't meant to sound corny, but it is about making the decision that's right for you. I live and breathe our housing market. It is part of everyday pulse, even at the weekend for me. And it's very hard to time the market precisely. And as human beings, we want to sell at the peak and buy at the bottom. Very, very hard to actually time and transact in that type of dynamic. I think if I was a buyer at the moment, I would be very much utilizing the lift in supply as my power of negotiation. Listings are rising. We're expecting them to continue to rise. So that means that many of our markets, particularly Sydney and Melbourne, have swung into favour of buyers. Some of our other mid-tier markets like Perth, Adelaide, Brisbane, they're slowing, but they're no way into a buyer's market like we're seeing in Sydney. So I do think it does depend on your personal circumstances. I think it's interesting, some of the conversations that I've been having with agents around, these proposed changes to how we treat negative gearing and CGT discount. It's in the Senate at the moment. They're trying to rapidly pass it through before the beginning of July. If that does come through, it is going to have a marked impact and a structural change in our housing market that's really going to impact next financial year. But I think what we've started to see, though, is particularly that type of seller who is close to retirement, they've gone, right, I'm just cashing out now. Let's sell that investment property and let's get out before we know any potential taxational changes that come through. So it's very interesting how those potential changes to how we treat investment properties are already influencing people's behaviour.
Yeah, for sure. I really liked your advice as well. I mean, it's often heard, and maybe it is a little bit boring to some people, but it is so true that you can't time these things with the property market. You can't pick the bottom. I mean, we've spoken to so many property experts and property investment gurus on this podcast, and even they have all admitted no one can pick the bottom. Like, we had one of the guys from Lux Listings, the reality show, one of the buyers agents, Simon Cohen. And he was saying, look, if I could pick the bottom, I wouldn't be here right now talking to you. I'd be sitting on the beach somewhere with my mansion. No one can pick it. So yeah, certainly maybe it's a slightly different story when you're investing in property. You do want to get your timing right, but as someone just buying a place to live in, the time to buy is really when you find a place that you like and that you can comfortably afford.
Absolutely.
So that's when I bought my place about 4 years ago. A lot of people were saying to me, no, it's a bad time right now. Probably interest rates are going up through the roof, and think property prices could be dropping about 20%. We just thought, we like this house. We haven't seen any others that we like, so we bought it and we haven't regretted it, and we love it. So
and look, one thing to remember is there is always going to be a floor to how far prices can actually fall. That floor comes from homeowners where they just don't sell when they think the price is far too low. But also we've still got construction pressure costs. So the cost to construct is still far higher than buying an established property. That dynamic in itself will continue to kind of create that floor for pricing.
Yeah, absolutely.
Yeah,
that's a
great
point.
Advice.
Yeah. Dr. Nicola Powell, I really appreciate your time on the Savings Tip Jar podcast. Thanks for your insights.
Thanks for having me.
Thanks, Nicola.